the last video, we discussed about the financial model template. Now, in this video, we are going to discuss about the how the financial model work and how to make a financial model. So let's start with that. So first, this is a cover page. You can put the logo of the company here. Then we have the index page. So this is the control sheet, first one. Then we have the summary, then valuation summary, executive summary, and the financial statement and ratios. So this is the income statement, balance sheet, cash flow, and the ratios are there. Then we have the financial statement drivers. It's the income statement drivers, balance sheet drivers, FCFF, cost of capital working, and the transaction multiple working, and the financials, public companies descriptions, and public company comparables, benchmarking, and this shit. Then we go into the another one. Let's say these are linked to the sheet, and how to link them. Here are the shortcut around Control plus K, and you can link this by the place in the document section. If we click on this, we'll go to the sheet. Let's say I'll click on this. So this is the sheet for the executive summary, and these are the number. If I press the control bracket, we go to this sheet again. Then we have the another one is the income statement. So let's say if I click on this one, so this is the income statement. This is the you know P&L of a company, how the revenue works. P&L, net revenue, other income, COGS, gross margins, and then we have the EBITDA, EBIT, PBT, taxes, PAT, etc. Then we have the another one. It's a balance sheet. So these are the output items. After there are different drivers for the income statement and the P&L and the balance sheet. So that drive the financial statement at another level. So these are the balance sheet drivers. So this is the balance sheet. Total share capital, reserve surplus, total liability, non-current liabilities, current liabilities. Apart from that, non-current assets, current assets, or different things. Then we go for charts for IM. So these are the charts for IM. Then we have the cash flow. So this is the cash flow on the basis of different parameters. Let's say it's a PAT, interest expenses, tax provisions, non-cash expenses, depreciation, change in the net working capital, current assets, account receivables, inventory, other current assets, other financial asset, liabilities, and we have the net working capital, income tax, etc. Then we have the cash flow from investing as well. It's a tangible assets. Let's say furnitures and fixtures, other equipments for the office equipment, investments, mobile phones, computer and laptops. Sale of the assets like the furniture, office equipment, printer, mobile phones, etc. Intangible assets, additions of the intangibles like software, licensing, trademarks, etc. Then we have the cash flow from the non-financing activities or financing activities, capital raise, dividend paid or the borrowed funds, etc. Then we have the cash flow from the financing activity and cash flow at the beginning of the year, net decrease or increase in cash at the end of the year. Then this is the main thing. We have the balance sheet drivers. So the balance sheet is linked with these drivers, and how this is detail of the balance sheet. Let's say there's an item in the balance sheet, the total share capital. Then we have the granular level details, like how the total share capital works. Then we have the reserve and surplus, and the non-current liabilities are there. So this is the principal payment, this is the interest payment, and these are the long-term borrowings. After that, we have the short-term borrowings. It's a principal payment, interest payment, and the total short-term borrowings are there. Then we have the salary payables and the short-term provisions, etc. Then we have the non-current assets. So it's a tangible assets, depreciation for the period, addition in the asset, sale of the asset, net value of the tangible asset. So this is something like that. Then we have another method. It's a intangible assets. Let's say amortizations, addition, sale of asset, net value of the intangible assets, something like that. Then we have the inventory, account receivables, account payable. So these are linked to the another sheet. Let's say I'll click on this, and these are linked from here. Let's say first equity. So we have the opening balance of the equity. Then infusion during the year. Let's say there's an investment from the any shareholding client, and then we have the dilution during the year. And this is the share capital at the ending, opening minus closing. Then we have the reserve and surplus. It's opening. Then PAT during the year. It's a PAT. Then dividend minus. Then this is the uh, reserve surplus, opening plus PAT minus dividend during the year. So this is how something like that. Then we have the inventory method, or we can say that the days inventory turnover. So inventory by cogs into 365. So it's a inventory turnover days. So it's a change in inventory days. And then opening inventory is something like that, 63.1, 69.6, etc. Then we have the purchases. It's a 45.7 or something like that. Then we have the cogs. It is linked to the IS drivers. So this is something like that. Like cogs is the purchases plus change in the inventory, and we have the formula for the cogs here, like purchase into, so we can say that like the C16, like AJ16 is something like that. Let's say we have the revenue model from the net revenue. Then this is divided by 21% of the COGS are here. Then we have the another financial model. So something, this is 43% of the net revenue. So this is the calculation of the COG. If we go to the next slide, or if we go to the same slide, we have to just press F5 and then OK. So we'll come to this number again. Then we have the account receivables. Let's say it's a day's inventory turnover of the day's account receivables, etc. Then we have the change in receivable ratios and the total trade receivables, etc. So this is something like that. Then we have the sales. So sales numbers are there. Then we have the account payables. Let's say it's a 45% or it's a 45 days account payable days, etc. So this is something like that. Then we have the total payable days for something. Let's say AL 92 by 30 into AL 95. So this is something like that, total payables. Then we have the COGS. So COGS numbers are there. Total payables and the COGS numbers are there. So this is something like that. This is the tangible asset list. Let's say furniture, office equipment, printers, mobile phone, computer, laptop, etc. So this is the asset list or tangible asset list, etc. So this is the furniture and fixtures. This is office equipment. This is printers. This is mobile phones, computer, and laptop. So this is the opening gross value of the tangible assets. Then we have the additions. Additions from that. Let's say these are the additions from the numbers, and then we have the sales of the assets. Let's say this is the sales, or this is the closing gross value of the tangible assets. So it's a opening one plus additions one minus sale of the asset. So this is the closing value of the asset we are working here. Then we have the depreciation for the period. So this is something like the depreciation schedule. We work on the couple of things as well. So this is the based on the depreciation rate of something. Let's say mobile phone, we look into the mobile phone in the particular list, and then we go into the depreciation rate for the particular amount of the asset. Then we have the accumulated depreciation. So this is the addition of the depreciation for the everything. Then this is the intangible assets. So there's a very good formula about this intangible assets, and we'll discuss about the next video about this. Then there are the loan details of the loan schedule. Let's say this is the long term borrowings, and this is the long term banks. This is the total number of the things at the beginning in the value. This is the other schedules are there. So this is something like that. Then we have the overdraft balance, or the number of techniques we are working generally on the future basis model. So this is how the things will work. So this is a glimpse of the snapshot of the financial model. But financial model are the very high profile things, and you have to work on the couple of things to get into the financial model in a deep dive manner. So let's start with the next session and to work on the financial model in a good manner. So in the this session of the financial modeling videos, I'll discuss about each and everything of the financial model, how to audit a financial model, how to make the good financial model and financial model for the different companies on the basis of different valuation method. So stay tuned for the more videos, subscribe the channel and like the videos for the more content. Let's meet in the next video. Thanks a lot.